If I told you that the single biggest stock market boom of our lifetime is still in its early chapters, and that several AI stocks in 2026 may massively outperform the S&P 500, would you want to know which ones? Today, I'm breaking down 6 of the most powerful AI plays for 2026, plus a bonus pick that could surprise you. And trust me, AI spending is accelerating so hard. Many investors aren't ready for what's coming. What you'll learn in this video before we dive in. Here's exactly what you're going to walk away with today. The 6 AI stocks most positioned for explosive growth heading into 2026. The one bonus stock everyone expects on this list, but with a twist. The latest global market forecast showing AI capex soaring toward $500 billion in 2026. Why memory, HBM, DRAM, networking infrastructure, power, and compute all matter in the AI megatrend, which companies may be undervalued and which could double again. Based on forecasted demand and industry growth, why energy and infrastructure may become the real bottlenecks in the AI race. How to think about risk versus reward in speculative AI infrastructure plays. So if you want a 2026 portfolio built for the AI decade, stay locked in. Main script, full breakdown with new context. AI stock number 1, Micron Technology, MU. The new fuel behind the AI economy, AI infrastructure demand is pushing memory chip demand through the roof. According to recent market estimates, the global memory market may reach nearly $200 billion in 2025, driven heavily by demand for high-bandwidth memory, HBM, and AI acceleration tech. Micron specializes in DRAM, NAND, and HBM, all critical for feeding AI accelerators. Experts expect HBM shipments to rise quickly in response to AI workloads. Why Micron still has room to run. HBM demand is exploding and memory markets are tightening. Global memory consumption, DRAM, NAND, HBM is surging with AI infrastructure build-out. Micron remains a top-tier player capable of meeting that demand. Despite macro demand, valuation for Micron appears reasonable relative to expected growth as discussed before. Micron may well be among the most vital suppliers in the entire AI supply chain. Not just a memory company, but the fuel behind every AI server. AI stock number 2, Alphabet, Google, the underestimated AI giant that rebuilt itself. The broader AI boom is gaining momentum worldwide. According to industry forecasts, global AI spending from infrastructure to software to chips is set to top $2 trillion in 2026. That means demand for cloud AI services, data centers, AI chips, and AI-powered consumer applications will surge, all of which plays into Alphabet's domain. Alphabet is integrating AI into cloud infrastructure, AI cloud services, YouTube recommendation, personalization ads, search AI chips, custom TPUs, enterprise AI tools, AI-powered products, and, with its vast scale and resources, Alphabet stands to benefit massively if AI adoption continues accelerating globally. Its diversification and massive cash flow give it a strong foundation, making it one of the handful of companies likely to lead the next AI wave. AI stock number 3. Broadcom AV, the networking backbone of the AI revolution. With AI data centers scaling fast and global infrastructure, build-out accelerating, demand for high-speed networking, interconnects, and server rack hardware is rising sharply. Recent data center spending reports suggest that global data center infrastructure investments are accelerating rapidly in 2025, with major tech firms pouring billions into expansion. Broadcom builds the networking, switching, and interconnect chips critical for linking GPUs and AI accelerators inside data centers. As AI compute clusters scale up, Broadcom's technology becomes more indispensable. Why? Broadcom stands out: dual-strength hardware network chips, plus software infrastructure after VMware ARE acquisition, positioned to capture a bigger share of data center build-out, as companies race to expand capacity for AI workloads. Likely to benefit from growth in demand for network interconnects, not just compute chips. If AI infrastructure build-out becomes the dominant theme in 2026 to 2028, Broadcom could be one of the biggest beneficiaries outside pure-play GPU or memory companies. AI stock number 4, AMD, the AI challenger with the most upside. Global forecasts for AI chips and compute hardware are bullish. The overall AI chip market, including GPUs, memory, network adapters, AI accelerators, is expected to grow strongly from 2025 onward, as AI workloads rise in cloud, enterprise, and edge deployments. AMD's MI300 series and data center-oriented chips are part of that supply wave. As more players diversify away from a single vendor, for example, to avoid over-reliance on one company, AMD stands to gain market share. AMD's strengths positioned as a credible alternative to the leading AI chip providers. Attractive valuation relative to its growth potential. Upside potential, especially if AI infrastructure demand continues to climb and adoption broadens beyond early adopters. A rising tide in demand could raise AMD's valuations significantly, especially if enterprise demand for GPU plus CPU hybrid accelerators picks up. AI stock number 5, Iron Limited IRN. One of the boldest AI pivot stories on the market, higher risk, higher reward. As the AI infrastructure boom scales globally, new bottlenecks are emerging, not just chips or memory, but power and energy. Data centers need massive and reliable electricity, cooling, and infrastructure. As more data centers go online worldwide, demand for power, energy infrastructure, and hosting services will surge. Iron has repositioned itself as a clean energy-powered AI data center operator and GPU hosting provider, aiming to take advantage of low-cost renewable-powered compute demand. Why Iron's pivot could pay off. It addresses a major bottleneck, electricity/power in large-scale AI compute. If demand for AI compute rises aggressively, as many forecasts suggest, hosting and power-efficient data center services will be in high demand. As companies scale capacity, many may prefer outsourcing GPU hosting instead of building their own expensive infrastructure. A potential win for Iron. Yes, this remains speculative, but the paradigm shift toward AI-first infrastructure means risk and opportunity go hand in hand, and Iron could be a higher reward play if things go right. AI stock number 6, Vistra Corp, VST, the most overlooked AI stock of 2026. Here, something few talk about. AI data centers just need compute chips. And memory, they need massive reliable power, electricity, cooling, grid capacity, energy infrastructure. As AI infrastructure expands globally, energy demand from data centers will surge. Recent industry forecasts suggest that global data center infrastructure and related capital expenditures are climbing rapidly. Vistra is a major U.S. power producer with a mix of natural gas, renewables, nuclear, and storage positioning it to supply that energy demand. Why this makes Vistra a sleeper contender? AI build-out increases demand for reliable power supply. Market still underestimates the energy component of the AI boom. Vistra's diverse energy generation portfolio may benefit from increased grid demand, data center expansion, and rising consumption due to AI workloads. If AI infrastructure becomes as massive as many predict, energy providers like Vistra could become critical and undervalued components of the AI supply chain. Bonus stock, NVIDIA, the king of AI chips, isn't done yet. NVIDIA remains the standard bearer for AI compute hardware. As the AI market expands, the need for high-performance GPUs and AI accelerators continues, especially in cloud, data center, enterprise, and research AI workloads. Recent forecasts show that demand for chips, accelerators, memory, and AI-optimized servers is projected to grow strongly in the coming years. Even as competition heats up, NVIDIA's ecosystem, performance advantage, and broad adoption position it strongly for long-term leadership. Why NVIDIA remains relevant? Mature AI hardware stack, leading GPUs, and broad adoption. AI infrastructure build-out globally sustains demand for its chips. Even if margins compress somewhat, growth in volume and demand could more than offset those pressure points. NVIDIA may not see 500% annual moves anymore, but it very well could remain a core, stable pillar of any AI-focused portfolio for years to come. Thanks so much for sticking with me today. We may be at the early innings of an AI infrastructure boom that will define the next decade. Understanding the full structure, compute, memory, networking, energy, is how smart investors stay ahead. 2026 might be the year when AI investing goes from hype to infrastructure-driven reality. And if you position wisely now, you'll be ahead of the herd. If you found this breakdown helpful and want more deep dive videos on AI stocks and market trends, hit that subscribe button and turn on notifications so you never miss a drop. Which of these AI stocks do you think will deliver the biggest returns by 2026 and why? Drop your answer in the comments below. I read every single one.